Is now a good time to consider an ARM, an adjustable rate mortgage? Are you considering taking out a mortgage to buy a home? And if you are, or if so, you may have heard of the famous adjustable rate mortgages, ARMs is what they're called for short. But is now a good time to consider an ARM? In this video, I'm going to explore what an adjustable rate mortgage is, how it works, and whether it's suitable in today's market. We'll also discuss the pros and the cons of ARMs and help you decide if it's the right choice for you. I always think when I say ARMs, it's people think my arm, but it's not. It's forget I said anything. What is an adjustable rate mortgage and how does it work? So let's talk about that. An adjustable rate mortgage is a type of mortgage in which the interest rate is not fixed for the life of the loan. Instead, the rate adjusts periodically, usually after the initial fixed period of that ARM. This adjustment is based on a specific index such as the US prime rate, or depends on how it's managed, but you also have to add the margins determined by the lender, of course. Now, these are some of the most common ARMs. We have a 3-1 ARM, 5-1 ARM, 7-1 ARM, and a 10-1 ARM. The first number refers to the initial fixed period in years. The second number indicates the adjustment frequency after that period. For example, in a 5-1 ARM, the interest rate is fixed for 5 years and then adjust annually afterwards. And I hope that made sense. It's just the easiest way to put it. Is it suitable to choose an ARM in today's market? So to determine whether an ARM is suitable in today's market, you need to consider several factors, such as interest rate trends, your financial situation, how long this plan is going to be, or how long the ARM is going to be. In a low interest rate environment, like the ones we just had experience, many people may be attracted to ARMs because their initial interest rates are often lower than those that are on the fixed mortgages. And this kind of works both when rates are high and low. Because you could get a lower rate. So it just depends. However, it is important to remember that interest rates can change over time. And if rates rise significantly, your ARM's interest rate and the monthly payment could increase as well. So with that being said, if you plan to move or refinance your mortgage within a few years, an ARM could be suitable for you. You could potentially save money on interest payments during the initial fixed period before the rate starts to adjust. But keep in mind that you'll have that certain time to either refinance or move or whatever your specific situation is with that specific property. Now, let's talk about some of the pros and cons of an ARM. But before deciding on an ARM, it's important to weigh these, I get the pros and cons that we're going to go over, right? So both the pros and cons in mind because they're both equally as important. So some of the pros: lower initial interest rates. Like I said, ARMs typically offer lower initial interest rates than fixed rate mortgages, and this can result in lower monthly mortgage payments for that fixed period. The potential savings that you might have: if interest rates remain low or decrease during the adjusted rate period, you could save on interest payments over the life of the loan. Another cool thing: flexibility. If you plan to move or refinance in a few years, an ARM could be a more cost-effective option for you, as you can take advantage of the lower initial interest rate. Now, let's talk about some of the cons. Interest rate uncertainty. ARMs come with the risk that interest rates are going to fluctuate or can fluctuate. And if interest rates increase, guess what? Your monthly payment could rise significantly, potentially causing a financial strain on you. Number two, they're more complex, meaning ARMs are generally more complex than a fixed mortgage, and understanding the terms and the conditions, they can be challenging for some individuals, not just because of the terms, but they might not understand how much the rate is going to adjust and so forth. We also have to keep in mind payment shock, the potential for a significant increase in monthly payments after their initial rate period can lead to payment shock, which could be difficult on your budget, your family's budget. So keep that in mind as well. Now, how are you going to decide if it's right for you? So to decide if an ARM is the right choice for you, here are some of the questions that you need to consider or ask yourself and how to potentially answer these. How long do you plan to stay in your home? If you expect to move, or like I said, refinance within that initial fixed rate period, an ARM may be a cost-effective option for you. But remember, if you plan to stay in this home longer, a fixed rate mortgage can offer I guess not the stability or the predictability. And are you comfortable with that risk of you might have a higher interest rate? And if you are financially prepared to handle potential increases in monthly payments due to rising interest rates, an ARM can be suitable choice for you. But if the uncertainty of future rate adjustments makes you uneasy or uncomfortable, then please do not take advantage of this. Can you afford the potential payment if it does increase? Before choosing an ARM, carefully evaluate and ask your loan officer, hey, what if the interest rate is 9%? How does that payment look like? And make sure you can handle the higher payment with the interest rate rise. And consider creating a contingency plan if this were to happen, such as building an emergency fund to help mitigate the impact of the potential rate increases. Have you compared loan options? It's essential and it's so important to shop around and compare various mortgage rates, mortgage products, including fixed rate mortgages and different types of ARMs. Analyze them both, analyze the terms, analyze the interest rates, analyze the potential savings to determine which option is the most cost effective and suitable for your financial situation. And do you understand the terms and the conditions? Do you know what an ARM fully is? And has your loan officer made you comfortable with the pros and cons of an ARM? Such as the adjustment frequency, the rate caps, the indexes used. And if you have questions, please consult your mortgage professional to ensure that the decision you are making is a good one for you. In deciding if it is a good time to consider an ARM, that totally depends on your unique financial situation, your risk tolerance, and your long-term plans. Look, ARMs can offer lower initial interest rates and potential savings, of course, in certain scenarios. They also come with the risk of fluctuating interest rates and potential payment increases. So carefully evaluate your financial goals, consider your options, of course, before making this decision. And as always, speak with that professional. And if you don't have somebody that you trust, reach out to us. We'll connect you with a trusted, reputable mortgage professional to help you determine if an ARM, in fact, is the right choice for you in your specific situation at that moment in time. And remember, the key to a successful homeownership experience is making informed decisions that align with your financial objectives and your lifestyles, guys. Can't stress this enough. Make sure it goes with your short and long-term goals because this will affect your future. Guys, thank you so much for tuning in to this week's episode. I'll see you on the next one.